Welcome, everyone. It's Angelo Robles, host of the Angelo Robles podcast and the founder and CEO at Family Office Association. Today, we're covering how the FX markets are quietly moving from centralized CeFi to decentralized DeFi. We have a great guest on. It's Kevin Zhang of DFX Finance. Kevin, welcome to the show.
Thanks, Angelo. Thanks for having me.
It's a real pleasure. Why don't we start really foundational? To you, explain the nuances of what we're mainly in now, a centralized finance world, and what does DeFi, a decentralized finance world, mean, and why should we care?
Yeah, so right now we're living in a world where your money gets deposited into banks, and they're generally like held by central custodians. You really don't have like if a bank run were to ever happen, you would probably not be able to withdraw your money fast enough, quick enough. There would be fractional reserves, and you just simply would not be able to get your money out. And that's what we generally call a centralized world where someone else really holds your money. Where we shift over to a decentralized world, we have a decentralized network of participants that keep a ledger of accounts and balances that you own. And what that means is that you have control of your money. There will never be a bank run. There will never be a time where you won't be able to access your money. And it is kept in such a way that you control your funds and you are the ultimate holder of your money. So I think really the paradigm is shifting from giving someone access to your money versus like being able to control and do what you want with your own funds.
And I know it sounds foundational as well, but we also have a lot of children of our members, which I'm really glad to know among the family office world and investors and a lot of young investors. I just want to make sure they understand if you could give a brief definition of the FX markets as well.
Yeah, the FX market is actually a very simple concept. It's really allowing you to exchange one currency to another. There are different ways that FX markets work. You can be like playing on the price and just converting from one currency to another. But another really interesting part of like FX is actually the settlement layer of it, being able to actually move physical cash like from one place to another and being able to settle that. Usually that actually takes days in a traditional FX world, actually moving funds and even doing it domestically, converting from one currency to another can take days with a centralized banking system. So yeah, it's not too difficult. Usually there's a bid and an ask, not too different from like a stock market where there's an order book and someone says, hey, I'll convert $1 Canadian for 80 cents US dollar, for example, and then someone else is on the other side of the market that will take that order. So it's usually a bid and an ask model.
Right. And we're going to get to some specific questions because what you're doing at DFX I find intriguing. Before I get there, still staying a little bit broad, what other kinds of questions about DeFi and blockchain technologies should someone like me be asking you for our audience to know from a foundational perspective?
I think it's really about, how do we fundamentally embrace DeFi in such a way that we provide additional value compared to the current system. We don't want to reinvent the wheel on DeFi. We don't want to provide a service that can already happen in a centralized way. We want to make sure the services and the products that we're building on top of DeFi is actually providing a net value on top of that existing system that we're currently using. So we're seeing like some project, hey, we want to move, traditional stock markets onto crypto, but what kind of additional value are you getting versus what you're getting right now in terms of like trading on the NASDAQ or on the New York Stock Exchange? We want to really make sure that we're doing this for the right purpose and not just doing it for the sake of doing it. we want to really embrace the power of blockchain decentralization, non-custodial features, and make it more powerful and enable the users to do more.
And on that note, let's kind of really get right to it. What are you doing at DFX Finance, and why should we be interested?
Yeah, so we're quietly decentralizing the FX market. We're moving from like generally centralized order book model to a decentralized non-order book model, where we're actually crowdsourcing capital and liquidity in a bunch of different currencies that get locked up into these very unique smart contracts that hold the funds. So these smart contracts live on top of the blockchain. And what they do is that they're coded in such a way that only you yourself have access to the funds. We at DFX can never actually claim or like move your funds for you. So in a way, this primitive really changes the way how we do it in a centralized world versus a decentralized world. So we're using this new method of crowdsourced liquidity from around the world to provide FX trades for different users. So we'll have buckets of US dollars, Canadian dollars, euros, Singapore dollars, like any currency that you can imagine. We'll have like little pools for them, and people provide that capital. And whenever someone wants to exchange one currency to another, one pool gets debited, the other pool gets credited, and the money gets like balanced back eventually as the price gets shifted. So we're really ultimately embracing crowdsourced liquidity and providing institutional FX rates to retail users. That's ultimately our goal.
Yeah, no, that's great. And besides, of course, being a capitalist and looking to make money, what inspired you and your team to build out DFX?
Yeah, absolutely. So I myself am from Canada, so deal with quite a bit of FX between, especially US dollar and Canadian dollar. So my partner and I built a company about 2 years ago that focused on enabling Canadians to get into the crypto market. And all we did was convert Canadian dollars to US dollar based stablecoins like USDC, USDT, DAI. And from that business, we did a lot of FX, especially between CAD and US dollar. And what we realized is that if we actually were able to tokenize that Canadian dollar, because we already have a tokenized US dollar in terms of stable coins and USDC, USDT, and a few others, if we were able to create a Canadian version of that and put that on chain, allowing our users to just swap between Canadian dollars, US dollars, not so different from what we're doing in a centralized manner right now with that business, where we're just holding a bunch of Canadian dollars and a bunch of US dollar stablecoins and just like bouncing back and forth. We basically create an FX market between that CAD USD pair. And then we started started thinking a little bit outside the box, say, hey, this is not a Canadian problem. This is not unique to our market. If we set up these pools in a bunch of different currencies are all around the world, we essentially create an FX network that allows you to go from any currency to any currency very, very efficiently. So that's what we started doing about 6 months ago, building out these smart contracts to enable these FX trades and these pools to be crowdsourced and build out this network of FX pools.
I mean, normally I would probably ask my next one or two questions later in the interview, but for a little different perspective for my viewers and listeners, and a lot of them are intrigued by the space, but don't really know how to be involved. One way, potentially, your case, you're probably all set, but would have been investing in companies like yours. So I would ask you, I know you recently went for a raise to raise capital, I'm assuming through traditional VC. How knowledgeable are some of them getting on the things you're talking about? And what would you say was like the best question that one of them asked you that maybe my investors could learn from?
Yeah, absolutely. So yes, we did raise from traditional VCs, but they're generally more crypto native VCs. So they understand the crypto markets, they understand that technology. most of them understood that, FX use case, mainly because it's so prevalent in our everyday lives, and it's nothing new. Most people understand that concept, and understand how hard it is to move money from point A to point B, and it resonated with a lot of people, especially those that are, I guess, like generally outside of the US, and they actually do a little bit more of that FX conversion. I would say the most difficult question asked, and I guess it comes up quite common, it's really how do we sort of create that market for non-US dollar stablecoins that basically does not exist right now. In the crypto, in the DeFi space, 99.9% of stablecoins are pegged to the US dollar. Majority of it in USDT, and then USDC, and then DAI, but they're all US dollar based. So what we're doing actually really changes that dynamic, where we're trying to bootstrap and become that catalyst to non-US dollar stablecoins in a way that we're bootstrapping liquidity for these new stablecoins. For example, we launched with our partner in Singapore a Singapore stablecoin, Singapore dollar stablecoin, and they started off with about $2 million in liquidity before DFX came in. Immediately after we launched with their stablecoin, it bumped them up to $10 million in liquidity. So that really changes the game with how DFX sort of influences that market in a way that you can always find liquidity on DFX and be able to get in and out of these stable coins very, very efficiently, cheaply, and that's what we're trying to do. Another example of the Canadian dollar stablecoin, it did not exist before DFX, so there was zero liquidity. And once DFX came into play, it supported that stablecoin instantly, $10 million in liquidity within a week. So we're able to bootstrap that liquidity that previously was not there. So that enables people to get in and out of different positions much, much easier.
Let's get a little bit deep into the weeds, and there's questions coming in via my text for some reason as opposed to the chat. So probably the audience is going to watch this and say, Angelo looks distracted again. I'm not, I'm paying attention. And one person wrote in, you're missing devil horns with your black shirt and red buttons. Thank you, by the way. I've heard that one before, so it's not the first time. Let's get a little deep. Can you give the audience a simple definition of bonding curves?
Yeah, so it's going to be difficult to simplify it, but really it's just a mathematical equation that automatically prices trades without a bid and ask model. So you don't need a direct counterparty that tells you, hey, I'm willing to sell X amount for X price or Y price. What the bonding curve does is that it does that automatically based on the pool ratio. So like how much money is in the pool and how imbalanced it is. So it always tries to balance back to a 50-50 model. So the best way I can sort of really explain it is that by putting money into our pools, you're trusting that mathematical model and that mathematical equation to always price the trade in a favorable way that you're generally not losing money and you're making money. So it's you can think of it as like a simplified market maker, someone that is almost like a bot that will always move your liquidity and price it in a different way. So you don't have to do it yourself. Some professional market makers run certain bots that allow them to make bids and asks at different prices really, really quickly through APIs. If you're doing it through a bonding curve, it basically just sets that initial algorithm so that you don't actually have to do any manual bid and ask and setting up a price.
And I think it's important to the conversation, perhaps give a brief definition of who they are, what it is, and let us know how it works. And that would be Chainlink.
Yeah, absolutely. So we at DFX actually use Chainlink as a pricing. So what Chainlink is that it is what they call in the crypto space an oracle provider. And really what an oracle provider really is it provides external off-chain data and puts it like on-chain. So it's almost like a third-party API provider, not so different from what we would consider like Bloomberg or Reuters. They provide like market data to the public in terms of like in an API or in a public-facing fashion. We hook into Chainlink so that they can grab a bunch of data from their partners in a decentralized manner and then feed it back to our system so that we can get a price on FX price feeds into our system. So in a very like simple way, it's no different from really just an API provider in the traditional web world.
What is more difficult to integrate, or in terms of Chainlink into the FX markets? Because I'm assuming, as you're describing it, if it wasn't for Chainlink, this would kind of not really be possible.
Yeah, so I'll answer that in two separate ways. So if we did not use Chainlink, we would really have to fall back into a Uniswap-like automated market maker, where it fully relied on the bonding curve. So it really depended on the supply of different currencies, and it would always try to balance back to a 50-50 ratio. So if one side was 70%, one side was 30%, they will price one side of the trade more expensive and the other side of the trade cheaper, so that it incentivizes people to actually shift that liquidity back to a 50-50 ratio. And that's generally what a Uniswap does. Whereas by using Chainlink, providing a price feed, we can actually concentrate the liquidity and the capital that we have in a very a much more narrow range that gives us significantly higher capital efficiency and allows people to make bigger trades with less slippage. So not that it won't work with Chainlink, but it becomes less efficient without Chainlink. So we believe that with this model, we're able to provide significantly better pricing for retail users and prevent our liquidity and capital providers from suffering significant impermanent loss, which is generally something that only happens in the blockchain and crypto world, where you have two assets that are placed into a pool, and one asset appreciates or depreciates faster than the other. The slippage in the middle is the loss that you may incur inside a pool.
And in terms of what is the future of stablecoins and how are central bank digital currencies going to impact the future?
Yeah, this is a very, very difficult question. I think it really comes down to regulations. And regulations, certain countries, certain states are more adverse to cryptocurrencies because it poses a bigger risk to their systemic monetary policy versus others. And I think there are scenarios where we will probably never get to a state where certain countries and currencies will have an effective stable coin. For example, like the Chinese RMB, maybe the Russian ruble. Like those states really are adverse to this like public decentralized system. So if anyone were to, set up a stable coin issuance and redemption provider for these currencies, they would likely get shut down by the government for, basically infringing on certain regulations. So we're working with different crypto providers to actually offer currencies that are in more at-risk countries and currencies, where those currencies will actually be crypto-backed and not fiat-backed. What I mean is money is instead not locked up in a safe or at a bank and minted. What happens is crypto is locked up in smart contracts, and an equivalent is minted in another currency. So I think we'll eventually get into a world where we're going to be more and more comfortable using crypto-backed stablecoins in such a way that we use fiat-backed stablecoins right now. CBDCs are going to be a very, very interesting, twist in terms of like our business and how I guess like users react. What we see right now with CBDCs, central bank digital currencies, is that they're all generally going to be siloed in a particular country. So everyone wants to issue their own CBDC within their own network, not really connected to each other in different countries. So if that is the case, you can really only use that CBDC in a domestic market. It does not work with a global market, and you can't really exchange it in and out for different currencies. So we are working with different tokenizers. So these stablecoin issuers, what they would likely do is actually, take in the CBDC and mint an Ethereum version of that same CBDC one for one, and really allow that CBDC to be traded and exchanged in a global market in the way that DFX works, where it could be compatible with DFX. So it's really not that different from the current system, but instead of digitizing a bank account balances, we're actually just wrapping these CBDCs in a way. It actually makes it a little easier for these issuers to create an Ethereum version of that same monetary value.
Let me ask a question. It's going to sound a little off target, but I think it does kind of circle back to that. And that's kind of Facebook's, let's call it Facebook's Libra. Mm-hmm. And I would think that the government must have looked at that and said, I mean, look at the number of users globally that Facebook has. It's bigger than most vast majority of countries. This is a little scary to us. Do you think that's why it's kind of stalled?
Yeah, absolutely. Especially the initial premise of Libra, where they were trying to create a basket of different currencies and really create their own currency with like its own value. And if that ever did happen, it would pose a systemic risk to even the US dollar, because that creates a more global, a better peg to like a basket of goods, and generally, yes, hopefully less volatile currency that gets exchanged around the world. And with the user base that Facebook already has, if they really push it onto the platform and create this like seamless payment system and user platform for this currency, you can really see why governments are a little scared of their own monetary policy, because they can't really control like interest rates, for example, by shifting the supply of their currency, right? So you're essentially giving a technology provider like Facebook that ability to do that and become that central bank for the world. So I can understand why regulators would be scared and are really pushing back on that idea. But I think we really need to start considering like sort of like a universal currency that can work with like every country. Right now, you sort of see that US dollar being that, like central currency around the world that's generally accepted everywhere. But again, that will give that the US government and the central bank in the US significantly more power than any other country that we see right now. Well, we're seeing that right now, but maybe there will be a future where that isn't the case.
What are some of the favorite projects you're working on and why?
Yeah, so I think some really interesting projects right now are the ones that are looking to scale Ethereum. I say this is not so much that their projects built on Ethereum, but this is a different ways that people are thinking about scaling Ethereum in terms of providing layer 2s or providing side chains, or even just scaling the core Ethereum ecosystem. Because Right now, we're seeing so much demand in Ethereum as a settlement network. The gas fees are going through the roof. People are paying significantly higher fees than they did, like, let's just say a year ago. I think the fees have gone up like 100x based on the demand of that network. So I think for mass user adoption, for consumer adoption, we really need to figure out a way for retail users to really adopt this ecosystem. And the people that are on the very like bottom of the stack building scalability features for Ethereum are the true heroes, because without them, we wouldn't be able to build what we're building. And really, I think in the next like 6 months, a year, we're going to see a tremendous amount of progress on that side. Ethereum already has a huge lead in terms of like, developer adoption community. If they can actually figure out that scalability option, there really will be no reason for Ethereum a competitor or Ethereum killer if they can solve that issue. But until then, I think we're really going to see really use cases for people that generally have larger order sizes, that are generally moving more money because the fees are getting more and more expensive. Doing smaller transactions just generally don't make economic sense.
And it's going to sound a little off topic. It probably is, but I'll try to loop it in. It's just been so much in the news, Elon and others, and Mark Cuban, et cetera, and Snoop Dogg, and on, relative to Doge. Not necessarily looking to get into the whole meme thing and its value. It's the value of whatever the community thinks it is, and it's pretty strong. So don't underestimate it, I would say. But let's dive a little deeper into the technology aspect and what you're talking about. Is it possible to build on top of Doge, which I don't mean to get too technical for people, but kind of a soft fork of Bitcoin, somewhat similar to like the layer 2 happening now, but you may want to go into, well, it's no state machine, it's not Turing complete. And again, we're not talking PhD level science to my members, just want to get the basics of it and how this could be impactful or valuable to them from an investing perspective.
Yeah, from like a compute standpoint, Doge really is quite limited. So you're really not able to really build on top of it. You're talking about like, price appreciation. It's really, again, it's really what the community values it at. It's really no different from, like an NFT. Like if you made an NFT versus if I made an NFT, like it would be valued differently because even if it was the exact same thing, because I personally don't have a community for NFTs. Like no one would really buy an NFT from me because I'm not known to really create anything and provide that sort of value to my community. Whereas if you create an NFT for your family office association, provided that your community wanted it, then they can set that price. They can set whatever value they want for this. And I don't believe that. I actually believe that Doge is very similar in a way. It's really just how people value it, how people think it should be valued. When it was first created, the inventor really just wanted to create a meme, right? It served no purpose. It was literally distributed to anyone that wanted it. It basically had next to no value until people started buying, trading. They thought that they wanted more. If people wanted more, then the price goes up, and if the supply comes down, it's just basic economics at that point, right? And really, as more and more people sort of like embrace it, Elon's talking about accepting Doge in the future. Like, I think Mark Cuban was saying that yes, he was gonna accept Doge in the future for, let's just say, I don't know, season tickets or merchandise for the Dallas Mavericks, for example. Then it has a purpose. And at that point, if more people start embracing it the same way people start embracing Bitcoin, then the price will go up. It will serve a purpose. I don't think that sort of purpose will generally be as a foundational compute layer the same way that Ethereum is. but it will have a different purpose for, a different use case. Whereas like Bitcoin might be that store of value similar to gold. Doge with a much cheaper transaction fee might be more used for payments. Like someone might want to, use their Doge to buy season tickets at the Mavs game versus using their Bitcoin, for example.
Is it possible to bridge the EVM to Doge?
As of right now, no, unless someone creates that like bridge layer. But like again, it would be not that different from bridging Bitcoin to Ethereum, right? Because Doge uses a lot of the core principles of Bitcoin. If there were a BTC Ether bridge, then it would be possible, and Doge could sort of leverage off of that. We see like certain technologies like hash time lock contracts try to hold an escrow funds on one chain and then mint and burn on another chain. So that kind of bridging can happen, but on a compute EVM layer, we haven't seen that to date.
Is Solana a legit competitor to Ethereum?
It can be. It can be. So Solana technology is pretty good in terms of like scalability. The only thing really preventing any Ethereum like competitor isn't really the technology. I think there have been like newer technology that have basically said or shown that it can provide that scalability option that Ethereum cannot right now. But it's usually it usually comes at a sacrifice in terms of like something, and that can be like decentralization, right? The more centralized you get, the easier it is for you to scale. Where like similar to the way that you see Binance Smart Chain, right? It is basically the exact same code as Ethereum, but because it's less decentralized, it's able to scale and bring down those transaction fees because there are only X amount of miners. So like scaling isn't the problem with Ethereum and the core code base. Is doing it in a decentralized manner and in a trustless manner that really makes it difficult. And if you're removing one property to get another one, it is definitely possible. Whereas I think Solana is interesting. It does have a lot of those properties of blockchain decentralization and everything. But I guess like I don't think it's an issue, but it will take time for that community to adopt it and really start building on it. Any blockchain is only as good as the people that are building on it and building applications, pushing it to the limits that you're seeing on Ethereum, really. So Solana, like many other Ethereum competitors, are up and coming. They're all trying to vie for that developer attention, so that more and more people start building on their chain, providing that tooling and infrastructure that allows more and more users to adopt it.
And back a little bit to the EVM, can merged mining be a gateway to EVM bridge?
That's a very, very interesting one. I've actually looked at this about 3 years ago, back when Ethereum was talking about Plasma and early days of scalability. Myself and a small team were actually looking at merge mining in terms of providing a side chain to the EVM that would basically peg back to the EVM. It's actually a very, very cool concept. I think it has legs. We haven't really seen anyone do it successfully right now. We're seeing rollups and layer 2 solutions almost act as a similar solution to merge mining, but the concepts are a little different, mainly because of the way that layer 2 solutions work. But the core principles are actually more similar than we think. So personally, I do think merge mining is a very, very interesting way of scaling. And providing that sort of like bridge between one chain to another.
Will Dfinity or another decentralized Web3 disrupt Amazon's AWS?
This is going to be an interesting one. The Dfinity, there's a few others that are trying to sort of like compete in that space. We haven't really seen that demand right now, but mainly because I don't think we've had a event where we sort of see the need for like decentralized compute in the same way that like I think we would probably need Amazon to somehow, crash all their data centers and no one has access to like 90% of the internet. And then people start realizing, hey, this is a problem. We can't have all our infrastructure pointed at one provider. Like, if Amazon goes down, does that mean we no longer can use Netflix, Facebook? Well, all these other services that we rely on, it gets scary when you think about how much they control, right? It is somewhat less centralized these days as there are more and more cloud providers popping up, like Microsoft Azure and Google Cloud are taking market share from AWS. So that kind of event is less and less likely to happen. But again, these are all centralized players. All the data is living inside the data centers. For whatever reason, if any of these data centers go down, it could be even like terrible, like global events, like a terrorist attacks or whatever it may be, that could really shut down a huge portion of the network. That before we realize that decentralization is where we will build more robust infrastructure, right? It will take time for people to realize that they actually need it. So until that sort of like catalyst event happens, I think it's going to be harder and harder to convince people to shift away from traditional cloud providers because just so much tooling and existing services are built on them right now.
Let's go back to a really big picture question, and for family offices and investors and those that are looking forward to the future, is DeFi, decentralized finance, a threat to the banking system? Will it completely destroy CeFi, centralized finance?
I honestly think that it will be a huge shift for traditional banking to actually move to DeFi. I don't think the banks will be going away anytime soon, but we will likely see more and more banks adapt and actually maybe even change their business models in terms of like, how they shift some of their business to that decentralized world instead of relying on a centralized model that they use right now. Instead of providing safety deposit boxes, they might provide key management services for users. So there are different ways that I see the banking system change. I don't think we'll get to a world where we're totally gonna get rid of the banks. They'll probably still serve a purpose. A lot of what banks do is based on trust. We still like to trust the banks. They're regulated. You believe that they will do the right thing. But for the people that want to manage and be accountable for their own money, they will be doing themselves. The little ones that may or may not have that technical capability, they may shift over to a banking system where the funds are still sort of funneled through centralized parties like banks, but they're providing different services, just being that layer for you to access that decentralized world instead of becoming that service layer.
I mean, taking that a step further, we hinted at it earlier with central bank digital currencies, centralized digital money. And really,
Exactly.
it's programmable money, programmable. And I've scared my audience when I talk about that. Different people get charged different interest rates, how it could be taxed instantaneously. But I would think about it from the perspective that you're talking. I mean, might that kind of kill small loans?
Well, I don't think it will kill small loans. I think you're actually going to see more and more small loans happen on chain. You actually see that right now, where people can provide funds into a platform like Aave, for example, and then they can take out a loan in a different asset. So it actually makes loans much more efficient in a lot of ways, and because of the efficiency, it allows people to get in and out of loans like much more quicker. The interest rates hopefully drop, and I think we're actually going to get an area where more loans actually end up happening, especially like microloans. Right now, we see loans happening all the time, like in terms of like credit cards. You just don't feel it. Like the money that you're spending right now on a credit card is essentially a loan by the credit card company. That kind of model can shift over on chain just as easily as what we're doing right now.
And I mean, I wrote about it in my Instagram post, and I have been promoting that a little more lately. We're simply our company name. Go check it out and subscribe. Family Office Association. 3 key questions to make money in the new digital era. What will get a network effect? What's going to get adoption? And what will develop a cult-like community? Sounds like Doge. But what you're doing, how does DFX plan to do just that? And are those important things for you?
Yeah, so the system is built out in such a way that every actor that's part of that ecosystem has an economic benefit in doing their role in a way. So the people providing capital and liquidity, they have an economic benefit because they're earning significantly higher risk-adjusted yields. We're probably talking about anywhere from like 10 to 30% annually. But when you think of it on a risk-adjusted basis, that's actually very good because typically you're probably only getting sub 1% in your traditional savings account. So like those actors have an economic benefit to provide that capital. And then we have users that come to DFX and they have economic benefit because we're providing institutional FX rates to retail users. And what you're seeing is probably anywhere from 5 to 10x cheaper than what you could get on the regular market through your banks, through Western Union, et cetera. So by pairing up different actors, everyone sort of benefits through that system. And the way that we approach it right now is that we're actually approaching institutional liquidity providers, more of like institutional audience first to build that like foundation, that base, create a large enough ecosystem, and then entice retail users with our significantly cheaper fees, our higher returns, provide an easier user interface for them to like use DFX really. So at some point, we're gonna like take that step into sort of like a call to community. Right now, we have a strong community of people that are providing liquidity and using our protocol. But we want to grow that. We want ideally we want that like Doge like cult like following, but really we serve a more foundational purpose. We provide a service, and we think that the protocol itself will provide merit for existing. And as more and more people use it, they'll hopefully share with other people and say that you can do this significantly cheaper on DFX. We really want to make moving money frictionless. So it doesn't matter what currency you're holding. Our fees are so low that it's almost negligible that you exchange from one currency to another. Like you almost don't even feel it because the rate is so good.
I'm going to ask a couple of questions that are typical in some of my interviews as being, boy, those are out of left field. And there, 2 of the 3 are going to tie into DeFi, especially the first one. Here it goes. Will the next world war be cyber, threatening our infrastructure and our grid? And could that cause, a deep one now, the US to lose its reserve currency status? But here's, feel free to comment, but a little more of the question part. decentralization of infrastructure and the grid is a possible solution.
Absolutely. I definitely do think cyber is that next, area where the next battlefield for different countries. You're basically seeing it right now. No one's sending soldiers, like, you're not really seeing that generally. You do see, like, some ships here and there patrolling borders and stuff, but really it's happening right now, and we probably don't feel it. We probably don't see it, but countries are definitely testing the security and the systems that other countries have in place right now. And really, a decentralized infrastructure is probably the best way to combat this kind of attack. The way that, like, the blockchain works right now, all the information is public. We're not trying to hide anything. It's like, how do you actually associate that data? How do you actually use that data to make it powerful and usable for you? That's another story. But everything is open. Everything is accountable. I think we need to get to a system like that, or maybe even a system where you have, like, privacy embedded into the blockchain. That could even be even stronger, because you're relying on cryptography to really mass transactions and enable a more robust infrastructure. Right now, I don't really see the government shifting totally decentralized, because they still need to keep it within their borders, within their walls. But we're likely going to see more and more cryptography used in securing their infrastructure. And I think blockchain will be one of those tools that they'll leverage in terms of securing that infrastructure in a cyber world.
Will zero knowledge proofs play into the privacy of or on the blockchain?
Absolutely. I think that's one of the the things that we haven't really tapped into in terms of a market. The technology is getting there. It's still not easy to use enough for everyday users to embrace it. But once we get to a state where they can be integrated directly on chain or directly into your transactions, it can become very, very, very powerful. And I think if it's possible to get mass adoption, your knowledge proofs will significantly change things the same way that HTTPS SSL has changed the internet in a lot of ways.
Yeah, that's a pretty deep one. We could really do a deep dive on that. And it's going to be very interesting in the future, having avatars, having our own personal items, whatever, social security protected, but still being verified. And just think of we're going to get a little, going to scare people, but maybe get them excited a little bit. Would the social platforms we use now, the TikToks, the Facebooks, potentially lose some of their power? I have people that have been deplatformed, sometimes for reasons that leave you scratching their head. The power is in the platform, it's centralized. If that becomes decentralized and someone has their avatar, using my example, in the blockchain, and has their followers and their supporters on that, then no one could take that from them. We're heading into some interesting times. Like you said, I just don't think we're there yet, but it's coming, and it's not going to take 20 years. Be much sooner than that. Not related to DeFi, maybe a pinch to the metaverse. Are we living in a simulation, Kevin?
We very well could be. We very well could be. Like, one of my favorite movies is Inception, and we can really be living in, like, multiple layers of dreams and different worlds that really cross between each other. I'm not ruling it out. Let's just say that.
Okay, for the young ones in the audience, what would you do differently if imagine yourself right now, and then boom, there's a 14-year-old Kevin, and you have a couple of minutes to kind of talk to your younger self, not going back to when you were 14, but 14 now in year 2021. What advice and preparation would you give yourself about where you see things headed and how that younger 14-year-old self could be happy, satisfied, and profit?
So you're saying I can't tell myself 14 years ago, like whatever years ago,
No,
and tell myself to
like
buy
who's going to
Bitcoin.
win the Super Bowl and then bet on it. No, no, no. Your 14-year-old self gets merged into right now,
Right.
2021.
I think the same idea would happen, like buy Bitcoin or buy crypto, right? I don't think the advice really changes because we think this is the future. That's why we're doing what we're doing. I've dedicated the last 5 years of my life in this space, and I think that even like a year ago, I don't think we foresaw what the ecosystem looked like today and how much it has actually grown in the last year. I think it probably grew more than 10x, probably even like 50x in terms of like users, volume, transactions, everything like that. I don't think anyone expected that a year ago. So honestly, give 14-year-old me the same advice. Just continue doing what you're doing. We think that cryptocurrencies will be the future. It will change the banking system. Keep building, keep investing. There's lots of opportunities. It's still very, very early. I think that's the premise I'm trying to really convey, is that so much of that infrastructure is not built yet. We still need to do so much work to get there. And because of that, there are so many opportunities in this space.
Yeah, there sure is. That's actually a great answer and hopefully very insightful, not just to those that may be younger and have a chance to fulfill their vision, their passion, their purpose, and have an idea where kind of Wayne Gretzky skate to where the puck is headed. But for those of us that are older, whether our own career or investing, and some of the reasons that you noted, the asymmetrical is assuming no leverage, whatever, $1,000 in, the most I could lose is that. But what's my upside potential? Volatile, sure. Risky, yes. I'm not saying these are treasuries, but the opportunity for an asymmetrical return, we may be in an era right now, and I don't know, maybe it goes on another year, 5 years, or 10 years, that may be one of the greatest opportunities to create wealth and really change the world that we've ever seen before. And maybe, I don't know, maybe we'll never see again. So that's why I become a big advocate of understanding the digital asset ecosystem and why families of wealth and resources, I would say they're ahead of institutions who tend to move very slowly, or institutional investors, but there's a lot of work they still need to do. Things are going to be very, very different. And if you just don't see that, you have your head in the sand. It's not going to go from digital back to analog. It's an opportunity for you to adapt. Central bank digital currencies is coming. Programmable money is coming. If nothing else, even if you elect not to invest in this community, understanding that the nuances of it, knowing how to use a hardware wallet or something like that, are all going to be things that are going to be important for you. So I know I beat this like a dead horse over and over and over and over. Ooh, that was probably a politically incorrect statement. I'm going to hear some shit on YouTube for that one. Angelo, you're sounding like the old guy again. Put back on those devil horns with that shirt. But if you had to give a closing comment and then how people could learn even more about DFX, please, I'm going to give the floor to you.
I think I'll jump into something that you said just now, and it really resonated with me. I think it's sort of risky not to hold any cryptocurrency right now. I think that's the risk.
Yes.
Right. Like at least like at least a small percentage of portfolio should be to hedge that risk in case crypto actually goes up 100 times, 1,000 times that we've actually seen it do previously. So even allocating a very, very small percentage of your portfolio into it makes sense, and actually de-risk yourself from that missed opportunity because there's so much potential in it. And actually, really, the closing remarks is if you have the opportunity, check out what we're doing at DFX. We're really looking to create a system where we're we're enabling everyone to use FX in such a way that it feels frictionless. Not so different from the way that Visa allows you to, if you go to Europe and you decide to buy a baguette, the merchant accepts it in euros. You go back home, you pay your credit card bill in US dollars. That whole FX exchange, you really don't feel it. They've made it fairly frictionless, but you're definitely paying a higher fee for that convenience of like roughly 2.5 to 3%. So we're basically doing that very similar concept, but providing a much lower price, bringing in different actors into the ecosystem where everyone benefits. So really building a marketplace of FX users to provide the best price and service to everyone.
Yeah, Kevin, it's been tremendous having you on. I really enjoyed it. We're really, again, pretty much neck deep, into the digital asset ecosystem. We haven't done enough on DeFi. You were a great guest. We look forward to having you back, especially as things evolve. I mean, I look at my Bitcoin, Ether, and digital asset ebook that I wrote with JJ Sowers back in December. It still holds up. It's still good. That was 5 or so months ago, but damn it, parts of it are dated. It happens to so quickly. Everything is evolving so quickly. Everyone, I'm Angelo Robles, the host of the Angelo Robles podcast, the founder and CEO at Family Office Association. Check us out at familyofficeassociation.com. And I'm going to recommend, because we're putting in some quick but cutting edge content before I often distribute it via written form, even on my Instagram. So that's Family Office Association. And my most active channel is probably still YouTube. So check us out. We're simply Family Office. You'll find it. Everyone, thank you so much. And Kevin, thank you for your time.
Thank you, Angelo. Have a good one.